From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB on the 9th of July. I'm Nadine Blaney, and it's really good to be here with you. I have a special guest coming up, Martin Crabb from Shaw & Partner. He's the CIO there, so we'll have a good chat. I'll get you through just a bit of a rundown of what's happened on markets today before we get there. And the CIBO Australia Index looking sweet as the curtains come down, up by 0.8%. And the S&P ASX 200, the last of the day's trades are still going through, but it's looking just as positive. Thank you, US, for that record lead in to the day's trade. Thank you, banks. We don't know why, but banks are doing really well. The miners are mostly positive. I will note that Fortescue has slipped into negative territory along with Min Resources and South 32, but BHP and Rio Tinto still higher. We do have plenty of hopes for stimulus coming from that so-called third plenum in China, starts next week. Whether or not that comes to fruition, we will see. I wrote a bit of a view for our newsletter actually today. Not really a strong view coming from me, but just giving you a bit of a heads up coming from CBA, not expecting big bang stimulus, Bank of America, not expecting big bang stimulus to come for the property sector from this plenum. So just something to keep in context when you are thinking about those iron ore miners. All right, the ASX rallying nicely along with some of our regional peers as well. We've got the Japan benchmark Nikkei marking a fresh all-time closing high. We had a couple of surveys out today. The Consumer Confidence Survey from Westpac, the monthly one, showing we're feeling a lot less confident. Tax cuts not bolstering our feels just yet. And we saw a little bit of softness coming through yet again in the NAB Business Survey in terms of conditions, not so much in confidence, but in terms of conditions, seeing a bit of easing in the employment component of that report as well. And then as we look ahead, we've got the US dollar drooping before this Jerome Powell testimony, so we'll be keeping an eye on that. Will he give further detail as to the thinking around an interest rate cut? Well, that is the pivotal question, isn't it? Okay, sectors very quickly. Don't want to keep my guest waiting for too long. We've got the big banks looking good, except for Macquarie. I'm not actually sure what's going on with Macquarie today. It's off by about 1%. Telstra, talking about Telstra because it's planning to lift its mobile prices. I love in its announcement to the ASX saying that it is taking into consideration cost of living pressures, but you know, it has to raise these prices to continue to invest in the network, we're told. Also cut, if you recall, a couple thousand jobs plus at the end of May in terms of cost cutting and productivity. So watching that one. We've got the REITs looking not so bad today either, although Goodman Group is underperforming the broader market. I had a great chat with Jonathan Higgins from United Capital Partners. I hope I got that name right. It's going to be up online shortly, just talking about how he's playing the whole decarbonization, electrification, data center thematic, and why some of those names that we do talk about quite a bit in terms of, Southern Cross Electrical, in terms of NextDC, why he still thinks that there's plenty of upside, even though the prices have done quite well over the past year. All right, let's get to it. Martin Crabb from Shaw & Partners is joining me now. Hey, Martin, nice to see you.
Good to see you too, Nadine.
Today. So is today just a reflection of what happened on US markets overnight?
Yeah, surprisingly strong. The market spent most of the day kind of up 50, 60 points, and then towards the end of the afternoon, it's just rallied. And we're always trying to find reasons to explain share price movement. So the best one I can probably come up with today is people not wanting to be short interest rate sensitive stocks going into the Powell testimony, because we've got 2 days of it, right? There's one hearing tonight and another one tomorrow. And if he reflects the same sentiment that he gave in Sintra at the ECB conference, it should be a dovish read. And so, I didn't really see that much move in the fixed income markets on the back of this, but it's more about the banks, the REITs. It seems like, okay, traders that were maybe short these things on a more of a hawkish view on rates are just saying, look, it doesn't make a lot of sense to be too short. And as you said, they've got the third plenum in China again, which could be stimulatory and give the market a bit of a run. So it just seems to be a little bit of positioning ahead of that, but on very light volume. Like it's school holidays in both New South Wales and Victoria at the moment. I think there's a lot of people away. So we're just looking at some trading numbers today, and a lot of stocks are very, very light on.
Yeah, I got a great seat on the bus this morning coming in.
Yeah, it's
Don't
one of the
mind that.
bonuses. I get to walk. I get to walk to work, and there's no traffic on the road. It's great.
It's great. Okay, so when you think about this record high after record high coming through yet again in U.S. markets, I mean, what's happening? And volatility is also so low.
Yeah, vol is super low. Like the VIX is like 12 or something crazy like that, and the Aussie one is like 8. The vol in Australia is about 8. It's earnings driven, so we're just watching very, very early days the earnings estimates for this quarter, and we've just been revised up. If you look at the red line there, it's the next 12 months earnings, and the black line is the following 12 months. And you know, we've just been up. So we were at 4% growth back this time a year ago. So the market was looking for, you know, GDP growth, nominal GDP growth around 3 or 4%, and then in earnings to kind of do the same. We're now looking at like 3 or 4 times that level. We're looking at 13% growth in the next 12 months, and then another 13 on top of that. And it's all being driven by probably a handful of stocks, Nvidia being key. So UBS just upped their earnings estimate on Nvidia by about a third overnight. So raised their price target 120 to 150. So that stock is just absolutely flying. And because it's a $3 trillion company, its impact on the market's quite substantial. So because all the AI numbers are being upgraded, people are upgrading Microsoft, Apple, Meta, Google, all those stocks are all being upgraded. So you've got this rising earnings outlook, and the market's just keeping pace with it.
But it's the big banks that kick off quarterly earnings season in the US, and that's on Friday.
Yeah, that's right. You've got Wells Fargo, Citigroup, and JP Morgan all coming out. And JP Morgan are usually pretty good because Jamie Dimon's always entertaining, right? He's always got something to say. He's been scaring people about interest rates going up to 7%. He's been scaring people about private credit, you know, about to be a train wreck. He's said the economy is going to get ugly. So he's always entertaining. Not the most bullish guy out there, but certainly always JP Morgan, good for a comment.
Yeah, it reminds me, it was the stock of the day yesterday on the call. We had a US special, and my guest said that bank is built for bankers, not shareholders. And the consensus, I think, was that it's maybe as good as it gets for JP Morgan this time around. But are you seeing, from where you sit, enough signs of softening in the labor market, in the US economy, to justify a rate cut come September?
Yeah, so there's a little bit of a double-edged sword because we're talking about a very positive earnings setup here, but it's all being driven by CapEx spending in IT. The underlying measures of inflationary pressure, the quits rate out of the JOLT survey the other day, the quits rate's down from 3% to 2%, which doesn't sound like a lot, but that's a lot. So rather than 3% of people saying take your job and shove it to their boss, it's only 2%. And that's resulted in wage pressures coming out of the system. So wages are now tracking at +4. They were tracking at +6. So if you're doubling the quits rate, that's kind of the level of wages you're getting. So as the quits rate comes down further, as more and more jobs become vacant, we will see that continuing to come down. So the futures market responded to that payroll number on Friday, not necessarily the latest read, but the downward revisions on the 2 previous months where they took over 100,000 jobs off the numbers, responded to that by moving from the green line, which is pre-Friday, to the red line, which is post-Friday. So we're now looking at sub 4% interest rates by the end of next year in the US. Completely different picture in Australia. In Australia, we're still seeing signs that the economy is ticking along and that the consumers still spending money. And so we're seeing this two-speed. We're going to see the US cutting rates because the data there is softening. But the fear is that the June quarter inflation number, which comes out on the last day of this month, if people haven't put that in their diaries, do so now. That's probably the biggest number they're going to see for a while. And if that's above 1%, the RBA is probably going to hike rates in August.
I was just speaking with a guest who said, nope, they will stay tight, but they're going to be patient. They'll have to be. Maybe May is the first time we'll see a cut. But yeah, I mean, if that inflation read does surprise to the upside, they've got no choice, do they?
Yeah, I think Michelle Bullock's kind of painted herself in the corner a little bit on this one by saying, firstly, that their biggest fear is that they don't do enough and they have to do more later, which, you know, the Fed was saying 18 months ago, that was their narrative. We need to make sure the genie doesn't get out of the bottle because of the correlated nature of wages and prices, you know. And in Australia, it seems things like the Telstra putting up their prepaid mobiles by 4%, that's above inflation. So, you know, all of us that have got a Telstra mobile plan have to make 4. We go to our boss and say, give me 5 to pay for these extra bills. And so you get this kind of thing taking off. They're so paranoid about that happening. There is enough stimulus in the economy from tax cuts, from government spending, from wage rises that have already been announced through Fair Work, that, you know, the RBA is behind the eight ball. It doesn't look like financial conditions are tight enough at the moment, so that strong inflation read is going to tip them over the edge, we think.
What about Telstra lifting its mobile plans? I mean, is that, as an investor, the shares were up, I think, 3% sort of at noon hour.
Yeah, it's interesting because this is a sector that's been super competitive for so long, and whether it was Vodafone or Hutchison or Vocus, if we want to go far, you know, and all these new entrants all chipping away at Telstra's domination of the industry. And so Telstra just had to keep fighting and lowering telecommunication prices. If you look at inflation numbers over the past decade, telcos is massively negative. Telcos and things like toys and clothes are massively negative. And yet now we're seeing inflation starting to happen. And it just shows you that competition's absolutely died away. It's a bit like the airline industry. There's just not, the only competitor's really weak and doesn't want to have a price war. And you kind of feel the telco industry is like that now. So the first time in a while, Telstra's flexing its pricing power muscle, which we've always thought it's had, we have thought it's had that back for a number of years now, but they're just starting to flex it. So not only are they ripping costs out, but they're now starting to say, actually, we've got some pricing power, we've got the best network, we're going to start not gouging because they're not putting them up massively, but we're going to start, you know, earning a decent return on these assets. So very good news for shareholders. The stock's been a massive underperformer. It still looks reasonably well priced. This should give it a bit of earnings momentum. So if you don't have it in your portfolio, it's probably worth a look at now.
Okay, interesting. There you go. And Bapcor was the other big corporate news of the day, knocking back this overture from private equity, Bain Capital.
Yeah.
What happens now?
Yeah, good question. I mean, we've seen companies knock back bids and then you kind of look at it 12 months later and say, why the heck did you do that? I mean, I'm thinking Perpetual's one. I mean, there's other companies that have knocked back bids and you go, why did you knock that back? You know, you're now trading a third below that. So the pressure's now on Bapcor to justify the outlook to investors that has made them reject this. But, you know, I think the private equity guys are usually pretty disciplined on price. We also saw some interest in Insignia in the media, the old IWF, IFL's the ticker.
That's why its price is up.
Yeah, that's another stock where it's rumoured that might even be Bain Capital as well, also looking at that. We saw Rex Minerals, a little gold miner, get a bid yesterday. So just M&A creeping back into the market, which is a good sign. It's not just mums and dads buying the market, it's corporates as well. But yeah, pressure's now on you, board of Bapcor. You've got to come through with the goods.
Yeah, all right. I'm glad you explained Insignia because I had missed that and was wondering why it was biggest percentage gainer on the 200. All right, so we do want to hear what Powell says tonight.
Oh, absolutely. So again, we're looking for, I mean, he's worked on his messaging a lot when he first became, the chair of the Federal Reserve. There was a few missteps with the media and he kind of got tongue-tied a few times and got a little bit emotional. He's worked on that. He's become a lot more consistent with his messaging. So I'd be very, very surprised if he doesn't continue the narrative from Sintra, which also is the same narrative as his last couple of presses, which were, you know, we think we've done enough. We think that inflation's sustainable on a path to 2%. We need a bit more data, but we think we're getting close to licking this problem. So the next move in rates is down, which, you know, he kind of said at the start of the year and then backed off a little bit. I think the recent message is more dovish. Their rates at 5.5 are too high. The 30-year fixed rate mortgages are 7.3. Their rates are just too high, and we're starting to see enough signs of weakness in the economy and enough deflationary pressure as well that they can start taking the foot off the gas and start cutting rates.
All right, Martin Crabb, thank you so much for joining us from Shaw Partners.
Pleasure.
Speak again next week. Look forward to it. All right, let's get across some of the corporate stories. And in addition to Bapcor, in addition to Telstra, we had Digital X saying that it was going to be launching an ETF on Friday. We also have, just a little bit of news around Suncorp and its sale of its banking assets to ANZ, which is still on track for July 31st. And the stock of the day, I think we'll get there, was Bapcor. Mark Moreland, Luke Larative. Let's take a listen to what they had to say.
To knock back a takeover offer that was probably opportunistic, given where the share price is and the sort of transition maybe that was going on at the management team, doesn't surprise me. I think, though, if you're going to be a Bapcor shareholder, you've really got to back in management from here that they're going to be able to turn this business around. I'm not sure that's going to be the case. I'm not sure that's going to happen necessarily as quickly as some expect.
and they've managed to increase their margins. So the net profit margin is quite a lot better as well. It's 10.9% and growing. So I think this is an example of a much better run business with a better strategy. So I wouldn't touch Bapcor. If you wanted to buy something in the space, it'd be Supply Network. However, Supply Network is fairly thinly traded as well, so it's a little bit illiquid.
All right.
So let's get across some of the leaders and laggards out there today. And by the way, if you'd like to listen to that entire episode of The Call, you can do so online, ausbiz.com.au, or if you're a podcast kind of person, you can listen to it in podcast form as well. And our stock of the days, you can access them via the website as well. So there's Insignia Financial. Martin Crabb says, talk of a takeover driving that share price higher. Liontown Resources, I can't really see any reason why its share price would be up. Judo Bank, Domino's, and Sims Metal. There you go. Sometimes there's days like this, but to Martin's point, very low volume. But I'm looking outside the studio here in Sydney right now, and what a beautiful day it was here in Sydney, and the sun is shining. On to the laggards. Keep that in mind when we look at the laggards. Capricorn, Nurin, West African Resources off by 2.5%. Treasury Wine Estate 2.5% lower, and Audinate as well off by 2% to $15.72. In the small to mid cap space, we've got Fastbrick. Second day in a row, we're seeing some big gains coming through for that company on a delivery of a unit to the United States. Fluence up by 8.7%. And Genus Plus, spoke about this one with my guest Jonathan Higgins from United Capital Partners, up by 7.5% on that contract win in WA. Now, flipping the page to some of the laggards, and you can see there just a motley crew of miners, explorers, and wannabe producers there. Tonight, Jay Powell himself, Jay Powell, in front of the Senate Banking Committee in the United States. We get a read on small business in the U.S. as well, and we'll hear from U.S. Treasury Secretary Janet Yellen. Fed Reserve Governors Michael Barr and Michelle Bowman will also speak. So quite a lot of Fed speak to get across there. And tomorrow, after the big sentiment reads today, we do get a speech from the head of economic research at the RBA, John Simon, as well as the RBNZ cash rate. I was speaking to a guest yesterday, Brad Gordon from Hobson Wealth. Boy, he was painting a very negative picture about what's going on over there in terms of the economy. So yeah, really watching that one with much interest. And we get inflation data, not just out of Japan, but out of China as well, both CPI and PPI. Well, shall we check in on the final figures for this local market? That is the CBO Australia Index that you see up on your screen. When it comes to the good old benchmark index, the S&P ASX 200, we also saw a positive session up by close to 0.9%, sitting at 7,830. So week to date, relatively flat after yesterday, but yeah, nice to see, and nice to see US E-minis are both positive. We've got India's Nifty 50 index hitting a record high. We had the Nikkei in Japan closing at a record high. And just a bit of news coming from the UK that Nigel Farage has won a seat in UK's Parliament. So yeah, and I trained on Europe to see what comes out of France, as well as just moving along with that UK detail coming through as well. Hey, it's been a pleasure to be here with you throughout the day today. If you've missed anything, I really encourage you to go to ausbiz.com.au to catch up with what you may have missed. Plenty of stock ideas, plenty of market analysis, asset allocation as well. And we'll do it all again tomorrow. We'll see you live from 9:45.